and welcome to Nirmal Bang, ladies and gentlemen. I'm Hital. We have with us Ria Singh, technical analyst, currencies joining in. Ria, welcome to the show. Ria, my first question coming to you is, what's the kind of movement that we're expecting with regards to the dollar index? Because a lot of conversations happening around that 104 to 104.5 are levels where the dollar index will actually, drive around. So what's the sense that you pick up?
Well, there is FOMC meet that is scheduled for tomorrow, and we are expecting that Fed will go forward with the 75 bips rate hike. And I think they'll also acknowledge that the economic slowdown has started off into the US economy, taking into consideration that the US GDP numbers will be released this week, and it will be second in line with the contraction numbers. So we will be seeing US economy contracting. So negative GDP numbers is what we are expecting. Well, I think they'll continue with the stand of committing to the 2% inflation numbers, but I think after 75 bips rate hike for the September, they could go soften on their hawkish stand and may commit towards 50 bips. Now, we are not 50 or 25 bips, but not a halt on the rate hike, I think, because headline inflation could peak out after 9.1% that the economy posted. But I think it will plateau, or if it even gets softened, starts the downtrend, I think it will be a very slower pace as against what we had seen, the aggressive hikes in the inflations. So I think they'll continue with the rate hike with the range of 2.25, 2.5%, but 50 to 25 bips, because core inflation will continue to rise, or will prove to be sticky, because the food inflation is there. Gasoline prices have fallen, but in natural gas price have again risen. Then if you look at the utility bills, they are on the rise. So core inflation will remain sticky, which should, let the Fed to increase rate hike. But of course, the 75 bips rate hike after this meet, the probability of again going forward with the same quantum of hawkishness is something that we are not seeing. So I think overall, taking into consideration the numbers, the negative US economy is posting negative numbers, whether it's with respect to the housing sector, consumer confidence, or ISM, PMI numbers, everything is negative. GDP has started to come off in the negative terms. So I think overall, with the rate hikes and QT happening, dollar index will continue to hold its stronger, flag, because 105, 103 is the support, and on the higher side 109, because once this negative number starts happening, and this pushes the market towards pessimistic picture of the whole economy, and this fuels the recession risk as well. So this is something I think will let the dollar index continue with a stronger hold, because the commodity prices have not fallen because there is a balance between supply and demand. It has fallen because there is a downfall into the, you can say, demand contracting. So overall commodity prices falling is a different scenario that it is happening. So I think dollar index will continue to hold its stronger ground, 105, 103, and with the upside at 108, 109.
Right. So that's with regards to where the dollar index goes. Now, taking this into consideration, how are you expecting the impact on other emerging market currencies as well?
Well, for the emerging market currency, of course, if the dollar index remains on the stronger hold, their central bank's action along with the government action plays a very very vital role, because as far as Indian currency is concerned, I think if you look at the collective efforts that have been taken by the RBI and the government, it has helped the Indian rupee of not going on a very volatile depreciation. Rather, it is a very sluggish depreciation that we are seeing right now. And I think going forward for the Indian rupee, the taking positive and negative factor, I think it will test 79.60 before again continuing with the depreciation leg. So it will test 80-25, 80-50 and 81 levels. But I think first a small correction is something that we are awaiting, 60 levels. And then it will go forward with that. So that will be something that even the other emerging markets have to consider.
Right. And in turn, if you see in terms of the Japanese yen as well, we did see a jump on the back of lower US yields. What's the sense that you pick up? Do you see intervention by Bank of Japan if the rates rise above 140 in terms of dollar yen?
Well, I think after testing 140 in today's session, it has come around 136. So they are not very much concerned about even surpassing that levels, because if you look at the inflation numbers, the price pressure has started to come into the Japanese economy right now. And the current scenarios, if you look into, the companies are getting this heat of the inflation and have stated that they'll pass on as much as 2% of the price pressure towards the end consumer. And once that happens, I think there will be some backlash that will happen to change the stand. But of course, the whole the scenario of the Japan is very different from what is going into the US and UK and all around the world, the inflation heat that the other economies are experiencing. So it is a very different scenario. But I think going forward, they'll continue with the accommodative stand, or we are not seeing any rate hikes that is happening. It could again test 140 or go beyond that on the USD JPY front.
Right. And how are you expecting the euro and the pound to move, Ria?
So Europe and pound, political turmoil is there in the EU region as well as into the UK. So in as far as Europe goes, I think they have started with the lift of a very, lagging action that they had taken. So they had ECB went for a 50 bips rate hike. So the era of negative rate into the EU has ended. But I think if you go forward with the numbers that are there into the EU altogether, now they are rising the rates at a time where the major economies there are facing quite a liquidity crunch. And they are into, if you look at the Italy situation, or if you look at the Spain situation, they are debt-ridden economies. And I think a more aggressive stand is needed in order to get the inflation down. So even they are estimating the inflation to rise at 11%. So at 11%, the cost of living there will be enormously high. And at the same time, a rate hike would again put a dent into the finances of the public. So it is a very, dull time for the EU right now to handle this kind of crisis where everything has fallen in the basket at the same time. For the commodity, because if you look there, the commodity prices are still high. They are paying high electricity utility bills, including electricity. And if they don't find another source for the natural gas, they'll be seeing a very cold winter. So not much of, positive there, but we will be waiting for the September. If they come out with their the tool that they are talking about and how they'll be implementing it and what are the other steps, we are again expecting a rate hike of around 50 bips because an aggressive stand would be needed in order to handle the situation. For the UK, I think the debate for the next PM is something that is at the center attention. If you look at both either of one gets elected, the whole agenda will definitely put a hamper, because tax rate, if there is a rate cut on tax, it will means liquidity into the economy, which means shoot up into the inflation. If tax rate doesn't happen, it means slower economic growth and more, effect on the cost of living and more backlash by the citizen there. So I think euro will be a much safer bet as against the pound right now.
Right. So basis all of this analysis, Ria, what are the strategies that you would recommend our viewers and investors?
I think you can go long into the USD INR right now. because there is expiry that is happening tomorrow, and you could see a small jump there. So you can go long into the August expiry, 26th August expiry for above 80.06 for a target of 80.32. Keep a strict SL at 79.80. You can also go long into the Euro INR above the level of 81.88 to keep a strict SL at 81.65 for a target of 82.05. So these are the two strategies that you can go forward with.
Right. Thank you, Ria. Thank you, participants, for joining us on the show. And thank you, Ria, for sharing the strategies and the views. Gives a lot of direction as well. Thank you and good luck.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.